Hey everybody, welcome back. It is Wednesday, March 4th. Let's get right into the news. It seems like it's a roller coaster, doesn't it? Up, down, up, down. I made money going long on Palantir once again today. So it's went long on Monday, went short yesterday, went long today. It just proves that you got to not have a bias and you got to be ready to quickly adapt to whatever the charts are throwing at your way. So let's get right into the news today. So the markets did just stage their best session of the week so far. And what drove the comeback is a story that every trader needs to understand. The S&P 500 gained 0.78% to close at 6,869. The Nasdaq surged 1.29%, finishing at 22,807. The Dow snapped a three-day losing streak, adding 238 points to settle in at 48,739. And Wall Street's fear gauge, the VIX index, cratered more than 10%, falling to 21. So the panic that gripped markets on Monday and Tuesday, it started to fade today, and here's one of the reasons why. If you've been watching this channel, you already know that the Iran conflict has been the dominant force hammering stocks all week, with U.S. and Israeli strikes on Iran last weekend, sending oil prices soaring and triggering fears of a Strait of Hormuz shutdown, choking off 20% of global oil supply. So yesterday, the Dow was down 1,200 points at its worst point of the day. But something shifted today. The New York Times reported that Iran's intelligence ministry quietly reached out through a third country spy agency, signaling possible interest in ending the conflict. That headline alone changed the entire emotional temperature of the market. Trump's promise to provide risk insurance for ships passing through the Gulf gave traders more breathing room, and suddenly the sell-off started looking like an overreaction, which is exactly the dip buying opportunity smart money was waiting for. Tech led the charge today. Micron and AMD each popped more than 5%. Broadcom and Nvidia added over 1% each. These are the large cap, cash heavy names that can absorb geopolitical shock better than most. And institutions rotated back into those trades pretty hard. But the rally wasn't just about Iran. Two economic reports dropped today that gave the bulls more ammunition. ADP private payrolls beat expectations for February, signaling the labor market is still holding up. Jolt's job openings came in at 7.23 million, exactly in line with forecasts. And the ISM services PMI held at 53.5, which is still firmly in expansion territory. All three data points said the same thing. The U.S. economy isn't falling apart just yet. But that said, don't get too comfortable. Treasury Secretary Bessent confirmed today that Trump's 15% global tariff goes live this week. But, as with most things, the president says, I'll believe it when it actually happens. So take that with a grain of salt. Supposedly, the 15% global tariffs will go live this week. We'll wait and see if that actually happens. The Fed's Beige Book reported that 3/4 of Fed districts flagged tariffs as a driver of rising prices. And Friday's non-farm payrolls report, expected around 170,000 new jobs, could flip sentiment fast if it misses. So what does that tell you from a big picture perspective? It tells you that the market believes that the worst case Iran scenario will be avoided. But the tariff clock is ticking, and the jobs report is just 2 days away. So until tomorrow, stay sharp as always. Watch yourselves, get in and out quick, trade the chart, trade the candlesticks, don't trade the news, all that good stuff that you always hear me say. If you do all those things, you should be okay. And last but not least, before I go, I do think I will be doing another one of my 3-day trading boot camps. So I'm thinking around March 24th to 26th or 27th, something like that. I'm not quite sure yet. I will have an exact date for you pretty soon. So stay tuned for that, because I think that's going to be happening this month. So until tomorrow, have a good evening and see you all tomorrow. Bye-bye.